What truly propels a global pharmaceutical giant forward? Is it just about, hitting financial targets, or is there maybe a much richer story unfolding?
Hmm. Usually much more to it.
Exactly. So today we're diving deep into Cipla Ltd's unaudited consolidated financial results for the quarter ended June 30th, 2025. That's their Q1 FY26.
Right, the very start of their fiscal year.
And to guide us, we've got Cipla's official press release, their board meeting outcome document, and the investor presentation, all dated July 25, 2025.
Good set of primary sources there.
Our mission really is to cut through the numbers, pull out the key insights, and help you understand the strategy behind the headlines. Get you well informed on Cipla's performance and where they might be heading.
Sounds good. Where should we start?
Okay, so kicking off with the big picture, what were the absolute standout figures from Cipla's first quarter of fiscal 26?
Well, the headline numbers certainly paint a pretty healthy picture. Revenue from operations grew 4% year on year. It hit INR 6,957 crore.
Okay, 4% growth. Decent.
But what's really striking, I think, is the net profit after tax, the PAT. That jumped a significant 10% year on year, reaching INR 1,298 crore.
Wow, 10% on the bottom line. That's strong.
Yeah, it is. And their EBITDA, a key measure of operational profitability, that also grew 4% to INR 1,778 crore. And importantly, they maintained a very strong EBITDA margin at 25.6%, pretty consistent with last year.
That 10% PP growth alongside a consistent, 25.6% EBITDA margin, that suggests more than just good management, right? It feels like their focus on maybe differentiated products is paying off.
Absolutely. I mean, it indicates a clear emphasis on efficient operations, yes, but also that strategic product mix you mentioned. They're not just growing the top line, they're growing profitably. That's crucial in pharma long term.
Okay, so that paints a compelling financial picture overall. But Cipla's a global player. How did the different parts of their business, around the world contribute? What were the key drivers? Let's start maybe with their One India business.
Right, India. That's their home turf. And they hit a massive milestone this quarter. The One India business grew 6% year on year.
Okay.
And it crossed the INR 3,000 crore mark for the first time ever in an opening quarter. It actually reached INR 3,070 crore.
Wow, crossing 3,000 crore just in India in Q1. That's incredible momentum. What specifically is powering that?
Well, within India, their branded prescription segment really led the charge. Key therapies like respiratory, urology, cardiac, anti-diabetes, anti-infectives, they all grew faster than the market overall.
Faster than the market is key.
Exactly. And their chronic portfolio mix is now pretty robust, sitting at 61.5%. That focus gives them, more predictable revenue streams.
Makes sense. Any new launches driving this?
Yes, on the innovation front, they successfully launched Voltido Trio. That's a new flagship for their respiratory portfolio. And it builds on things like Forecort G inhaler, which was India's first triple therapy for COPD, and Glycohale FB inhaler.
Ah, yes, the DPI one.
That's the one. The world's first triple drug DPI for COPD. So real innovation there. Plus, their trade generics also saw strong growth. Good execution, and they introduced 7 new products, even expanding into orthopedics.
Orthopedics, interesting expansion.
And finally, consumer health. Brands like Nicotex, Omnigel, Cipladine, they continue to hold leadership positions in their segments, really contributing solid growth.
Okay, strong domestic story. But Cipla's success isn't just India-based. North America is always a huge focus. How did they do there? The reported revenue was, $226 million?
Yes, $226 million for the quarter. And the traction in their differentiated assets there is, quite impressive, actually. Take albuterol, their asthma inhaler.
Right, a big one for them.
It's ranked no. 1 in the overall U.S. albuterol MDI market. It got 19.5% market share.
Almost 20%. That's significant.
It is. And they've supplied over 50 million inhaler units cumulatively to the U.S. market. It speaks volumes about their manufacturing and supply chain, right?
Absolutely. Reliability is key there.
And lanreotide, another key product, its market share also increased, up to 21% during the quarter.
Okay, so existing products performing well. What about new stuff?
They've been busy there, too.
Yeah.
Launched nanopaclitaxel vials, that's an ANDA, a generic,
Right.
and nilotinib capsules, which is an NDA, an innovative drug. Both strengthen their oncology portfolio, offering both value and new treatments.
Given how tough the U.S. generics market is, that 19.5% albuterol share, How sustainable do you think that is? What could challenge it or maybe help solidify it?
That's a really good question.
Yeah.
Sustaining that kind of share needs constant effort, supply, quality, often pricing pressure.
Yeah.
For Cipla, their manufacturing scale and reliability are huge advantages.
And the pipeline.
Exactly. Looking ahead, Cipla has a strategic agreement to launch its first biosimilar in the U.S. That's expected in Q2 FY26, so quite soon.
But biosimilar, okay, that's a big step.
It is. And the pipeline keeps developing. Gadvair, the generic version, seems closer to commercialization. They're also prepping for G-Symbicort and maybe a couple of other inhalation assets in FY27, plus plans for 2-3 peptide assets in FY26.
Peptides too, they're really broadening the portfolio.
Definitely building for the future. As of June 30th, they have, 178 approved ADAs and NDAs, 39 tentatively approved, and 65 under approval. That's 282 total.
Wow, that's a deep pipeline.
It's their long-term engine, really, that breadth and depth.
Okay, moving across the globe, Africa. Their One Africa segment seemed to keep up its momentum. Revenue growth was 11% YoY in USD terms.
Yes, good growth there. The prescription business in Africa is now ranked #2 overall. And the private market specifically, their secondary growth, that's like pharmacy sales data, was 5.6% compared to the market growing at 3.8%.
So growing about 1.5 times faster than the market.
Precisely, driven largely by strategic new launches tailored for that region.
And emerging markets in Europe, how did that segment fare?
Also healthy growth, 8% year-on-year in USD terms. They mentioned a deep market-focused strategy seems to be laying a solid foundation, seeing an uptick in both their direct-to-market DTM and their business-to-business, or B2B, channels.
So tailored approaches working across different regions makes sense.
Seems so.
Now, clearly, this kind of growth, especially with the pipeline you described, doesn't just happen. It needs fuel, investment. How much is Cipla actually putting into R&D?
Good point. Their R&D investments stood at INR 432 crore for the quarter. That translates to about 6.2% of sales.
6.2%. That's a solid commitment.
It is, and it connects directly back to those product filings, the development efforts, the new launches, that whole robust pipeline we talked about. It's really foundational to their strategy.
So we've got strong operations, healthy pipeline, significant R&D spend. Putting it all together, what does this mean for Cipla's overall financial health, their balance sheet stability?
Well, looking at the balance sheet, the indicators are exceptionally strong, really robust. They have a net cash position of INR 10,379 crore.
Over 10,000 crore net cash.
Yes. And cash equivalents are slightly higher at INR 10,838 crore. Meanwhile, their total debt is remarkably low, just INR 459 crore. And that mostly includes things like lease liabilities and working capital needs.
So very little actual borrowing.
Exactly. If you zoom out, Cipla appears to be in a very, very strong liquidity position. This kind of financial strength gives them enormous flexibility, right, for future investments, maybe acquisitions, or just navigating any market bumps.
Okay, that financial strength is clear. But, a company's stability isn't just about the numbers. It's also about navigating the legal environment. And Cipla has this long-standing issue detailed in the board meeting document, the NPPA litigation. Can you shed some light on that?
Yes, the NPPA issue. It is complex, and it goes way back. We're talking about demand notices from the National Pharmaceutical Pricing Authority that started back in 1998.
Wow, 98.
Yeah. They're seeking recovery of alleged overcharges on certain drugs under the old drugs prices control orders from 1995. It's been through various legal battles. There's a Bombay High Court ruling that initially favored Cipla, but that was set aside by the Supreme Court.
Okay, so a real legal saga.
Definitely. Back in 2003, Cipla actually deposited INR 175.08 crore with the NPPA related to this. Now, the latest update from July 15th, 2025 is that Cipla voluntarily deposited an additional INR 27.07 crore.
Voluntarily?
Yes, but and this is crucial, they stated it was without prejudice to its position. Meaning making the deposit doesn't legally mean they agree with the NPPA's claims. It doesn't affect their ongoing arguments.
Right, a legal maneuver. So what are the total stakes here? What's the potential exposure? And, how does a company even manage a dispute that lasts for decades?
The stakes are quite considerable. The total amount covered by all these notices and communications, once you remove duplications, adds up to INR 2,011 crore.
2,000 crore?
Yes. That breaks down into about INR 863 crore in principal, and then a very substantial INR 1,148 crore in interest that's accrued over the years.
Wow, the interest is more than the principal.
That happens with long-running disputes. Now, how do they manage it? It's a complex balancing act. Cipla's official position, based on their legal advice, is that they expect a favorable outcome eventually. Therefore, they haven't made any financial provision for these demands in their accounts.
So they're confident in their legal standing.
That's the stance. Generally, companies in this boat engage in rigorous legal appeals, sometimes negotiation, and always careful assessment of whether to provision or not. Cipla has chosen the path of strong conviction in their case, which, carries potential upside if they win, but also risk if the final judgment goes against them. It's definitely a major regulatory issue they're navigating carefully.
Okay, understood. Stepping back now from the financials and the legal side, let's talk about broader impact. How does Cipla show its commitment to sustainability, to corporate responsibility? What progress are they making on those ESG goals?
Right, ESG. They've actually made some pretty significant strides, especially looking at their India manufacturing operations. This is based on their FY25 progress reported in the investor presentation.
Okay, what are the highlights?
Well, emissions reduction is a big one. They've achieved a 58% reduction in absolute Scope 1 and Scope 2 emissions. That's against their FY 2019-20 baseline. Their goal is an 80% reduction, so they're well on their way.
58% is impressive progress.
It really is. And then there's water. They've actually exceeded their water neutrality goal. They achieved 1.75 times water positive.
Wait, 1.75 times positive, so they replenish almost twice the water they consume.
Exactly. And notably, 67% of their India manufacturing sites are zero liquid discharge, or ZLD. Nothing goes out. Plus, all their India manufacturing operations are certified as zero waste to landfill, ZWTL.
ZLD and ZWTL,
Yeah.
those are tough standards to meet.
Absolutely. And on renewable energy, they surpassed their 50% goal, achieving 64% renewable electricity usage.
Those are phenomenal environmental achievements, especially that water-positive status in India, given the water stress there. How hard is it to not just meet, but actually exceed these kinds of targets? And what's the benefit beyond just looking good?
Oh, it's incredibly challenging. It demands continuous innovation, serious investment in new tech and infrastructure. The benefit, though, it's multifaceted. Sure, there's brand image, but it's also about operational resilience. Think water scarcity risks. It's about potential cost savings from less waste, less energy use, and increasingly it's about meeting demands from investors, from customers who expect sustainable practices. It really future-proofs the business in many ways.
Makes sense. What about the S&G and ESG, social and governance?
On the social side, their stated goal is zero fatalities. But regrettably, they reported 2 fatalities in FY 2024-25. That's a stark reminder of the risks in manufacturing. On a positive note, they've achieved full compliance with the safe discharge targets set by the Antimicrobial Resistance, or AMR, Industry Alliance. That's critical for tackling drug resistance globally. Specific products like ciprofloxacin and azithromycin made at certain plants are even BSI certified as AMR compliant.
That AMR compliance is huge from a public health perspective.
Definitely. And on governance and supply chain, about 36% of their total procurement spend was with suppliers audited on ESG parameters. They did over 200 assessments, so pushing responsibility down the chain. And transparency-wise, Cipla is one of the few Indian pharma companies to do and publish a double materiality assessment.
Double materiality, what does that entail?
It means they're looking at sustainability from 2 angles: how environmental and social issues impact their business, but also how their business operations impact society and the environment. It's a more holistic, responsible view.
Okay, a very comprehensive picture on the ESG front then.
Seems so. They're clearly putting significant effort there.
So wrapping this up, we've just navigated a pretty deep dive into Cipla's Q1 FY26 results. We've seen, a robust financial quarter, strong performance across key markets like India and North America.
Right. Significant investment in R&D. That pipeline looks strong. And a remarkably solid balance sheet.
Yeah, that net cash position is striking. We also touched on the complexities of that long-standing NPPA regulatory challenge, a big overhang.
And contrasted that with their really concrete, quite ambitious progress on the sustainability front.
Exactly. So thinking about all these threads, financial performance, market leadership, legal battles, ESG commitments.
So let me ask you, and maybe our listeners too, what really stands out to you when you consider how a global leader like Cipla balances that relentless pressure for financial growth and market share against these decades-long legal issues and this increasing global push for real environmental and social responsibility?
That's the core question, isn't it? It's a dynamic, incredibly complex equation, one that's really shaping the future of global pharmaceuticals. We definitely encourage you to keep exploring how these diverse, interconnected factors play out, not just for Cipla, but across the industry.